All right, so welcome everybody to this Be the Sniper or Be the Target webinar training. My name is John Skelton. I'm head of operations here at Apex Investing. Tonight we're going to talk about mastering the Xbox, okay? And we're going to be talking about what we call the basic or naked Xbox setup. But first of all, as always, let's knock our disclosures out here. Trading futures, options, or anything involves risk. Make sure you know what you're doing before you get into it. And I'll leave those up there for just a moment for everybody to take a look at. But everything here in this webinar and in this training is for informational and educational purposes only. So, setup number 2. All right, the naked Xbox. And tonight we're only talking about the naked Xbox with the trends or in a range-bound market. In the next training, we'll talk a little bit more about divergence and other ways to take them counter trend. All right, and everything we do with trade setup number 2 is all of our charts and templates are based off a 10-tick diagnostic bar, and we're trading them on NQ or MNQ. All right, now you can use them with other markets. You have to adjust for the different markets and bar sizes and so on. But everything that we do our training on, everything that we show examples of, most of the times what's being called out in the elite trade room, unless specifically stated otherwise, is all going to be on either NQ or MNQ. And we do focus that, we do suggest that if you're brand new, that you start off with focusing on one of those two markets. Either NQ, which is, the NASDAQ 100 index futures, or the MNQ, which is the micro NASDAQ. Okay, so the NQ is the mini future and MNQ is the micro. So we suggest you start off there. You can trade anytime, day or night. And, something that we really like to dig home, and you'll hear us talk a lot about this in the elite room. You'll hear Lori and Daryl talk about it, especially Lori, is you're paid to be patient. Okay, you're paid to be patient. We don't want you chasing trades or, hey, I got in a little too late, but I took it anyway. All right, there's always going to be another trade. Just breathe, just relax. Don't push a trade. Don't chase a trade. Don't get in too early. Don't get in too late. Don't follow your gut feeling. You do what the chart is telling you to do. Okay, it's pretty simple to learn a trading setup, right? I mean, for those of you that have already, learned what, a trapped Xbox trade is, it's really not that hard to look at the chart and say, okay, that bar had an exhaustion box and that bar has a trapped order and it closed down, so I entered short. It closed up, so I entered long. That's not hard. We can teach you that in 5 minutes, right? I can teach my kids that. But normally the key to success is more about knowing when not to trade, okay, or when not to take a setup. All right, and that's a lot of what the sniper system is all about. Okay, it's just like a sniper waiting patiently for days in the grass under cover just for the right shot, not firing off hundreds of rounds. Everything has to line up just right for the sniper. Okay, and that's what we're going to talk a lot about here tonight as well. But we do have you start off with the highest probability setups, which are the enhanced Xboxes. Okay, so learn those first, master those first. As you get that master, get that down, the naked Xboxes or the basic Xboxes, trapped Xboxes, are what you can add on after that. Okay, so that's where we're going to start. For those of you that are new, you want to make sure to watch the 2 videos about understanding the charts. Okay, that way you understand what each level is on the chart, understand what are the deviation levels, what are the order prints levels, and really help you understand the rules for doing the naked Xbox trades. All right, where we talk about the highways and the order prints. How do you get to that? Well, if you hop on over here to the Apex website and you log in, you just go right here to the Sniper Trading Bootcamp, okay? And you can click on that. And what you want to do is, if you have any questions about the charts or the levels on the chart, you understand that when we start you off, this is your life right here, like this page. Most everything you need is right here on this page, okay? If you watch a quick fast track video, get signed up for any webinars, and then jump right in and learn the enhanced Xbox trades. All right, we've got some cheat sheets for you. You can hop right into the elite room to be in there with all the other traders, see the charts, be in there in the mornings with Daryl and Lori. You can access some more forums and set up Ninja, what's next, all kind of great information. But right here, understanding the chart overview. Okay, you've got several different videos in here that you can watch. All right, if you have any questions on the charts, the indicators, the different levels, I want to direct you here to rewatch this, or if you haven't watched it yet, to go in and watch it and understand order flow, the dynamic levels and order prints and the highways and how these really work and how they affect you. If you have a good understanding of the chart and what you're looking at, it's your roadmap. You know, it tells you, hey, drive or don't drive, take this turn or this exit or don't. All right, so make sure you've got a good understanding of the roadmap ahead of you, all right, and the chart that's in front of you. And that's where you can find that. All right, so make sure to check those out as well. So once again, you add the naked Xbox trades to your enhanced Xbox trades when you're ready to progress. It's an add-on. Start and master the enhanced, then go on from there, okay? So, as you're probably already familiar with, the 7 steps to sniper trading setups. Identify the target, identify the pattern, identify any obstructions, identify the entry, the exit, the cover, and the opportunity. Okay? So, what is a naked Xbox trade? Okay? Now, real quick note. You'll see in the elite room, there's some people trading NQ, there's some people trading the micro NQ. All right, and you can take a trade off of an NQ chart on the MNQ, or you can trade off the MNQ on NQ. All right, you can take a trade. Sometimes one of the charts will show a trade set up that the other one doesn't quite show everything lined up. All right, but you can take the trade off of either one. So what is a naked Xbox trade? It's simply an exhaustion box with a trapped order. All right, and what we're talking about right here in this section is taking the naked Xbox trades in the direction of the trend only. We're not going counter trend. We're not going against the trend. What we're talking about right here is going in the trend direction. All right, and what tonight we're going to teach you just a very basic, objective, simple way to identify the trend. All right, a lot of people that are brand new are like, well, is it trending? Is it range bound? Well, what is it? We're going to teach you a very objective, simple way to recognize the trend and a very simple way to recognize range bound. As you grow, as you start trading more, reading charts more, reading the market more, you'll have a whole different, sense and view of how to recognize trends and range. But we want to give you something to go off somewhere to start with. All right, and what we're going to use here for this section of determining the trend is it has to be in the same direction of DR, which is our deviation reversal indicator, and I'll show you that here. Okay, so the setup bar that you enter on, if you're going to take a long trade, meaning you're going up, you're going to buy, well, then the DR color has to be green on that bar. Also, it has to be green on the bar before. We'll look at some examples of that. Also, an entry is always only on a reversal bar. Okay, even though I say we're going with the trend, okay, it still has to be on a reversal bar. What do I mean by that? Well, let me just pull up a live chart here from earlier real quick. Okay, what do we have right here? We have the market going up. What is this right here? We got an X box with some trapped orders in there, right? Is that an entry to go long? Who can tell me yes or no? No, it's not. What do we have over here? We have an X box with a trapped order. The bar closes up. So, the market's going up. We have a trapped X box that closes up. Shouldn't we take it? No. We only enter on reversal bars. What do we see up here as the market comes up, pulls down a couple of bars, then this bar reverses and goes back up. That bar has what? Trapped orders and an X box. Is that a valid entry? Because it's a reversal bar. Right, okay? So for anybody that's new, that's what we mean. Just because a bar has that does not mean it's an entry. We're only taking a reversal bar, meaning there was a couple, you know, there was a down close, and then a close back up. That was a proper setup, and we're taking it along with the trend. Okay? So that's what we mean when we say the entry bar is a reversal bar. Okay? So let's do a little chart review, look at a couple things here. On your template, on your sniper template, okay, that you have access to in the Apex toolkit, the same one you see in the Elite Trade Room and in your mentor rooms and so on. You have an indicator down here called, we call it DR, which stands for deviation reversal. Okay, and you see how thick it is here. You can choose to either make them real thick, or like you saw in, you know, my chart, one of my charts here that you saw a minute ago, right here, they're, you know, they're thinner bars. Okay, so make them thin, you can make them thicker, whatever. But these are the same two indicators, and notice they're either always red or green, right? Okay. There's many other ways we use the DR. We'll talk about that later. All we want to talk about right now is what color is the DR? Is it red or is it green? So if you're looking at this chart right here and you're wondering, okay, what trades am I looking for? Am I looking for longs? Am I looking for shorts? What are you only going to be looking for? Longs, because it's green, right? Now, is this the perfect trending indicator? Is all into the story period? No, but again, starting off, it's a very good way to start off with to determine the trend. Okay, so when this is green, I'm only going to be looking for long trades. All right, I'm only going to be looking to buy. So it's green right here. Now, what do I technically have right here? I have an X box, exhaustion box, and I have trapped orders, but it's a down close bar, which would mean I'd want to go short. Can I go, or should I go short right now? No. Why? I mean, it had an exhaustion box, it had a trapped order, the bar closed. Okay, so I don't want to go short. For one, I'm very glad I didn't, right? Going into this, you know, ZOI and mini magnet got a few ticks reversed, but it's not with the rules. It's the wrong direction, because I'm only looking for green when this thing is solid green. I'm only looking to go long. Okay. Now, what about here? This one actually would have worked, but don't, you know, don't reward yourself for bad behavior, right? Trapped X box, right? Or exhaustion box with trapped orders, down close. That one actually would have got 10 ticks, wouldn't it? Okay, but it's still against the trend. It does not qualify, because we're only looking for what? We're only looking for longs right here, because this is green. So what do we have right here? We have an exhaustion box with trapped orders, and a bar closes up. Right? We'd enter one tick above the close of this bar and take that trade up. Right? Yeah, good setup. All right, and what are we going for? We're looking to enter one tick above the close of the bar. We're looking to go for a 10 tick take profit, okay, which would be 1 bar, 2 bars, would be right here. And that trade worked, didn't it? So now, let's talk a little about something here. Is every single trade going to always work if you follow the rules? Nope. If I sat here and told you that it would you believe me? Should you believe me? Would it be smart of you to believe me or anyone that told you that? No one ever, never. There's no such thing as a holy grail, 100% win, always profitable, always winning trade, is there? No, there's not. You are going to have losses, okay? But we put these rules in place to help you take the highest probability setups, right? Now, when you have rules in place, are you going to miss out on some trades? Like this one right here? This had an X box, had trapped orders. It actually would have got 10 ticks. Don't be dumb, okay? Don't be dumb, DBD. Well, I mean, that one would have worked, so let's just scratch this rule. And I just want to take them all. Well, what about the one right before it? Right? So, yes, when you have rules in place, are you going to miss out on some trades? Absolutely. But it's about the probabilities. It's about taking the best of the best, right? Isn't that really what trading's all about? Any of you that were at the live event last year heard me on stage talk a lot about probabilities and possibilities, and talking about, I gave the example of the casino, right? You go to Vegas, you go to a hotel. What do you do? What do you go to Vegas for, to go to a hotel for? You go to gamble, don't you? At the casino? Well, okay, and Vincent goes to drink. I'm all right. I like that, Vincent. We can hang out. Okay, but the point is, you go to Vegas, you go to a hotel, you go to the casino floor, you go sit at a table, you're at a table, and what do you have at a table? You have players and you have a dealer, right? Okay? You and that dealer, you're in the same state, the same city, the same hotel, the same casino floor. You're sitting at the same table. You're playing with the same dice. You're playing with the same exact deck of cards. You're playing the same game, right? But one person at that game on one side of the table is the gambler, right? Who has no discipline, going off emotion, not following rules, going with his gut, gambling. On the other side of the table, you've got a dealer who's doing what? Do you think that dealer just got hired by Caesar's Palace off the street? Oh yeah, sure, come in. Right, Vincent, house always wins. Why? Because they're trained, they have a set rules that they follow. They don't deviate from their rules. They play their odds, they play their probabilities, and they play the numbers, and the house wins. Right? If you're playing with that dealer and you win a big hand, ooh, I got that one. Does the dealer suddenly change up their way? Oh, I got to change. I got to do a different strategy or system. I got to do something different. No, they keep following their rules. Because what happens if they keep consistently following their rules, they have an edge, right? So rules are in place for a reason, to give you an edge when you're consistent with them. Will there be times where there's losers? Yes. Will there be times where you feel like, oh, I missed out? But it's all about your edges and keeping those edges and sticking to the rules. Okay? So does everybody understand this basic concept of, we're going with the trend, the DR is green, we're only looking for long trades, not short trades. Simple enough? Okay. Now, what color is the DR? It's red. We're only looking for short trades, right? Meaning to go short, sell, go down. Okay? There's two trades you can see on this chart here. First of all, right here, DR is red. We have a trapped X box, and we enter short. Did this trade get 10 ticks? Right here. No, it did not. Does that mean it's a losing trade? We're going to talk about that in a minute. We're going to come back to that. What's the next trade you see here? Exhaustion box with trapped orders, and it's a down close. We enter one tick below the close of the bar, and we go for a 10 tick take profit. Got out right there at profit. Okay? Understand? Okay. Randy says, I have a question. How do you calculate the ticks? Okay, Randy, these particular bars that are here on this chart, see right here, these are 10 tick bars. What that means is this shaded area right here to here is 10 ticks. Okay? So what that means is, if we got in right here, from right here to the close of this next bar is half a bar, right? So it's this half of a bar is 5 ticks. Okay, does that make sense, Randy? And then where this bar closed, this next half a bar is another 5 ticks. Okay, now when you enter your order, you can, you'll see the ticks as it going, going up or down. It'll show you up 1, down 1. But basically, that's how you figure that at the close of this bar, your 10 ticks is basically just right here under the close of this bar. Because if it's a 10 tick total shaded bar, then half is 5, half is 5, you're out. Got it? Yeah, it's sometimes a little more difficult to use the price because it ticks in quarters and you're like, okay, 9065.25 up to 9067.75. Wait a minute, right? So, all right. So we're only taking in the direction of the DR going with the trend. So here's the big thing, okay? What I talked about before was, learning the basic rules is easy. You just learned them. The DR is red or green, right? It has an exhaustion box and trapped orders, you take it. Pretty simple. But oftentimes the key to success is more about knowing when not to trade, okay? And a lot of that comes down to looking at obstructions. What's in your way? Okay, it's like driving a car. All right, hey, I can learn to drive a car pretty easy. But does that mean I should go out and drive it in the middle of a crazy hurricane with 80-mile-an-hour winds that's blowing all kind of crap in front of the road in front of me? Or is that going to give me some obstructions and I probably shouldn't drive? I mean, I don't know how to drive. I'm just smart enough to see what's in front of me. I'm smart enough to look in my rear view and side view mirrors to be aware of my surrounding while I'm driving the car. Right? That's the difference between, or one of the big differences between safe driving and not. So, a couple of obstructions, a couple of rules. We do not enter 5 minutes before or after the open, which is at 9:30 a.m. Eastern Time. If you're in the elite trade room, you'll hear Lori calling it out or Daryl calling it out like, okay, hey, it's 9:32. Okay, 9:33, get ready. Because we don't take trades until 9:35. Okay? Why? Well, because right there at the open, things can go a little bit crazy and, amateur hour and things adjusting for news and overnight stuff. We don't enter 5 minutes before or 5 minutes after big government news announcements or earnings season announcements. We also do not enter going into an NQ wall. Okay? What is an NQ wall? Well, once again, check out those videos that talk about that. But on your charts, you see these dashed lines right here. Okay? Sometimes they'll show up as different colors as well. Those are NQ walls. You have them on your template. We do not take trades going into an NQ wall. Now, here's a very important one. Okay? Do not enter into a double mini magnet. Now, everybody pay close attention here real quick. Because I know that, see, right now we got 183 people on this webinar. I know 25 of you are typing right now, and you're going to ask me, well, what qualifies as a double mini magnet? How close together do they have to be for you to say don't take it, it's a double mini magnet? Do they have to be a few ticks apart? Tell me I'm wrong. I know a lot of you are asking that. Well, what do you mean double mini magnet? I don't care if they're stacked on top of each other. I don't care if they're 2 ticks apart, 5 ticks apart, or 8 ticks apart. Where you enter compared to 10 ticks later where your take profit is there 2 mini magnets in the way? Then I'm going to call that a double mini magnet. Does the market have to get through 2 mini magnets within the next 10 ticks to get to your take profit? Then I'm not going to take it. Okay? Otherwise, we do not enter into 3 of anything or stacks, meaning like normally just one paw print or one mini magnet is not going to stop the market. Okay? Now, if we're at all-time highs, meaning, hey, we're higher than the market's ever been, we don't have a lot of historical levels to go off of here, then just one single level, like one single paw or one single mini magnet or so on, is an obstruction. Okay, because it's the only thing the market has to go off of as far as some new level or support resistance. So at that point, you know, when we're at all-time highs, we do consider one level to be an obstruction. Okay, otherwise, just one single one is not a big deal. But a stack of something, 3 of anything, is something we don't want to trade into. Okay, if I'm about to enter a trade and I'm going for 10 ticks of profit, but 6 ticks away from me is a stack of 3 things, what's the probability that it could make it through that? Well, we don't know. But is it a high probability or more likely a low probability? Sometimes it'll blow right through it, won't it? But in general, it's probably a lower probability that it's going to break through there. And as a sniper who wants to be the sniper and not be the target, it's probably best that I don't take that lower probability trade, right? Is it smart of me to really risk my live money in my live account when I see that right in front of me? Probably not. Okay. We also do not enter when we have 2 clusters within 3 bars, which can include the setup bar. And then we're going to avoid the first entry within that range. I'll give you an example of that. Okay. Because what we found and what we teach is that when we have 2 clusters within a 3 bar range, that could show us that we're in chop and that chop is coming up. Okay, I cannot even start to explain to you how powerful that is. Okay, there's nothing out there that tells you when chop is coming. It only tells you when you're actually in chop. Different indicators, different system. Oh, we're in chop now. Well, yeah, and it took you 10, 15 bars of chop to be able to tell me that. That's a little too late. Okay? There's nothing as powerful out there anywhere like the order prints 2 cluster within 3 bar heads up that chop is coming. Okay? Yeah, JP. Now, if it breaks out of the range, okay, if those clusters make a range and the market breaks out of that, then it doesn't matter anymore. We're out of that chop. Okay, if a cluster forms after that, that's okay. All right, it's about 2 clusters within 3 bars. Okay, and after the clusters and a setup occurs, you take the next setup. All right, we see that chop, we have a setup, we don't take it, we take the next setup. That way we make sure we're out of the chop. Okay? All right. So, we're going to identify the trend. We're going to remember that the setup bar is always a reversal bar. And we enter 1 tick above or below the breakout of the setup bar as marked by the bar range indicator on your chart. Again, the profit we're going for is a 10 tick scalp. And keep in mind that's 10 ticks from the high or low of the setup bar. It's not 10 ticks from your fill price. Okay, what do I mean by that? Say the bar closes and you had your order waiting there, but the market's moving fast or whatever, and you got filled 3 ticks above the bar. Well, the rules are to get in 1 tick above the bar and get out 10 ticks later. So if you didn't get in till 3 ticks above the bar, do you still wait to get 10 ticks? Or should you get out when you're at 7 ticks? 7 ticks, right. Does that make sense to everybody? Does everybody understand what I'm saying? Okay. And your stop is 1 tick below the high or low of the setup bar, the opposite direction, approximately about 20 ticks. Okay. Now, very, very important here. So your stop is at the high or low of the bar. But Let's say just above that, close to that higher low of the bar, you've got a mini magnet, you've got a Paul, you've got an NQ level that's laid within 4 ticks or less. Then you need to put your stop on the other side of that level. I'll show you an example to show you what I mean, okay? Because it's very, very important. Right here, your take profit. When a level is right near your take profit, within 2 or 3 ticks. So let's say, hey, I'm going for 10 ticks, but about 7 ticks away, like just a few ticks from my take profit, there's a level there. Okay? I want to go ahead and just take my profit. Or I want to tighten up my stop. Okay? Because if I'm going for 10 ticks of profit, and I'm now at 8 ticks, and I'm up profitable 8 ticks, but there's a mini magnet right there. What could happen? The market could reverse, right? So would I rather have it reverse and lose, or just get out with 8 ticks, or pull my stop up right there to protect that 8 ticks? Oh man, but I could have got the 10. Yeah, or you could have got negative 20. Take your 8 and be happy and get out. Be smart. Using the ATM, the Automated Trade Manager, will automatically place your stop and take profit. So you'll have to manually adjust that if you see one of those levels right there. Okay? So if you see a level right there, just pull it up. Good example. Okay? Good example of that. Right here, let me see. I'm sorry, here's the screenshot. Do you remember this screenshot right here? Where I said, all right, DR is red. We're only taking shorts. Remember how this short did very well. Remember how I said, okay, this had an exhaustion box and trapped orders closed down. If I entered 1 tick below there, remember I asked you, did this trade quite get 10 ticks? Nope, it didn't quite get 10 ticks. Remember I asked you, so does that mean it was a loser? Right? Because what should you have done? Because this paw print was right there close to your take profit. When it got down there, what should you have done? Either close it out and got your profit, okay, or tightened up, okay? Tightened it up, right. Okay, so there's an example of that. Let's see here. Now, this trade here, this is not the greatest chart to be showing you here. This is just as an example. This had an exhaustion box and trapped orders, and we were going short. Now, it did not line up with the DR, so it was not a valid trade, right? What color is the DR? Green, which means we're only taking longs, and this was a short trade. So that right there would have invalidated the trade, right? Everybody understand? That's not a valid setup. But let's just say that the DR was red, and you had exhaustion box and trapped orders, and it closed short. Just 5 ticks away or 4 ticks away, what do we have right here? What is this level? An NQ wall. And we do not take naked Xbox trades into an NQ wall. Lower level, exactly. Okay, so not the best example to show you because the DR wasn't the right color, but just wanted to show you there. That is a good example of we would not take that trade even if it was valid. And we're probably glad we didn't. It didn't quite get to 10 anyway, right? But that's an example of, let's say this was a valid short going right into that NQ level, we don't take it. Make sense, everybody? What I meant when I said don't take it into the NQ wall. Okay. Now, if the bar had closed below the NQ wall and we're past it, and it was valid, then okay. Now, here is an example. What color is the DR right here? green. We have an exhaustion box, and we have trapped orders. The bar closed up. DR is green. This is, trapped X, bar closed up. Do we take this trade long? Yes or no? Okay, I'm getting mixed answers. Okay, there's two reasons why we don't take this trade long. Okay, yes, on the setup bar, the bar that would have set us up for us to go long, the bar that had the exhaustion box and the trapped order, the DR was green. But remember, the rules are the DR has to be green on the setup bar as well as the bar before. What color was the DR on the bar before? Red. Okay, so that's the first reason that we would not have taken this trade. Okay, so keep that in mind. It's not just about, and I'll give you I'll give you an idea why here in a minute. Okay, so the DR has to be that color on the setup bar and the bar before. So that right there would have disqualified the trade. Does that make sense to everyone? Any questions on that? It's got to be green or red. It's got to be, the setup bar has to be the one color and the bar before it has to be the same color. Okay, so right there disqualifies the trade, right? Now let's move on to the second reason. Let's say that it was all green. DR was green, no problem, closed up. What's the second reason that we would not enter this trade to go up? Exactly. Right above it, what do we have? Boom, NQ wall. We don't take trades going into NQ wall. What also is another rule about three things? Remember, a stack of three? What do we have here? NQ wall, ZOI, Paul. Is there enough room to profit? Is there enough room to get your 10 ticks there? No. Okay, right. Exactly, Carl. It has obstructions. Okay? Obstructions. Okay? So, does that make sense, everybody? Now, keep in mind, these rules are for the naked Xbox trades. This has nothing to do with the enhanced Xbox trades. Does everybody understand? Those are a complete different set of rules. The enhanced Xboxes require either a paw or a mini magnet. They require it to be within 2 ticks of another existing order. Separate rules. Do not confuse them with these rules. Because with these trades, the naked ones, they don't have to have a paw or mini magnet. They don't have to be 2 ticks from an existing order. These are the naked ones. These are the regular, just trapped and Xbox. Does everybody understand that? Don't confuse the two. These are completely two separate trades. Okay? All right, just want to make sure. Anyone that has been on my webinars or training in the past knows I like to talk slower than Daryl, and I like to repeat myself about 4 times to make sure everybody gets it. And then you all make fun of me. But then some of you say thank you. You're welcome, Eric. So I want to make sure that everybody gets this. Slow and repetitive. That's how you learn. Make sure we cover the bases. Make sure you understand the difference. Okay? And make sure you've got it. So, okay. So I had several of you say, oh, I didn't get that. That makes sense. So big heads up there. To go long, needs to be green on the setup bar and green on the bar before. Okay? And some of you are wondering why. Let me show you. We're going to talk about it later. What do you see on this chart right here? Green, red, green, red, green, red, green. Do you see all that? You see when that DR is switching colors all over the place? What do you have? Chop, range, complete different set of rules. We're going to cover those in a minute. Does that make a little more, oh, those aren't just random BS made up rules. There's a reason for it, right? And what are we talking about right now? Naked X boxes in the trend direction, right? Remember I said that? This is about with the trend direction. So with the trend direction, what do we want to see? We want to see green or red, right? But when it's switching back and forth, okay? Peter says, oh, light bulb moment. Right. Does that make a lot more sense now, Peter? I mean, and all you guys have to do is just go look at a chart. You know, go look at a chart and you'll see it. And you'll be like, oh, right. How come I never got that before? Makes total sense. I mean, or Floyd too. Look at earlier today. This is today, 1:30, or January 30th, about lunchtime. Let me squeeze this chart in a little bit and just look for yourself. There's a little bit of green that popped up there. Why? Well, because it made a decent sized pullback before it kept going. But what is this market? It's trending down. Where's your DR most of this whole time? It's red. Downtrend. And then what happens right here? Red, green, red, green, red. What is all that crap? The chop range after a big move that Lori always talks about, right? After that big move, what does Lori always tell you? The big move, don't expect it just to go, boom, one bar, let's go up 500 points. No, she always talks about, all right, now we got to do our thing, and then we'll play around, and then, leave it alone. Let it play there until it decides to go and, oh, look at all this green and all this green. And then what? A lot of down, red, see? You see that with the DR? A lot of you guys didn't even know to look at that, did you? When that thing is solid red, 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 we're in a downtrend. You don't have to think about it. You don't have to draw trend lines. Okay? Helpful? A little bit different way to look at some of these things. Okay. So, what do we got here? We have, what color DR do we have? Green. So we're only taking long trades. What is this right here? Exhaustion box, trapped orders. Now notice this is an NQ wall, right? But this bar closed above the NQ wall. So can we take that trade? Yes, we can take it. We enter one tick above, go for 10 ticks profit, and we're out, right? Okay, what do we have right here? X box, trapped order, down close bar. Give me two reasons we don't take this trade. First, obvious big reason. It's a down close, but we've got green DR. We're not taking it, right? That is also an enhanced, yes, but just looking at it from a regular Xbox standpoint. It's a short trade. We're not taking shorts right now. Also, what is it trading into right here? NQ wall. If Lori's on this webinar, I'm going to give her a big head, but look at this. What did the market do? When this bar closed down, the market went to that NQ wall to the tick. Like, doesn't that amaze you guys how these levels work sometimes? I mean, literally to the tick, boom, went the other way. Do not take them. So, what do we have next? Because we do like when trades come off of an NQ wall, right? We know that an NQ wall is powerful. This one here, exhaustion box, trapped order, closes up, DR's green. Do we like that trade? Exactly. We do not like that trade. Did it fit the first few rules? What did I say earlier? And I said it more than once. So I'm going to do it again. How hard is it to learn a setup? Number one, is this green or red? Green. So I only go up. Number two, did this bar close up? Yes. Did it have an exhaustion box? Yes. Did it have a trapped order? Yes. I can teach my 5-year-old, or well, 6 now, easy to learn those rules, right? But what do we always say? What's more important even than knowing the rules or knowing when to enter is knowing when not to enter, right? What do we have above here? Boom, 1 mini magnet. Boom, 2 mini magnets. Boom, mini magnets up here, whatever. We don't go in, we don't take a trade going into double mini magnets. One of you earlier, and I'm sorry, somebody asked, can you show a chart with double mini magnets? I'm so sorry, I don't remember who asked that, but there it is right there. Okay, that's why I didn't get to the question then, because that's a perfect example right there. Because if this bar closes up and I enter 1 tick above, I'm trying to get 10 ticks of profit. If I have to go through 2 different mini magnets, I don't care if they're 1 tick apart, 5 tick apart, if between my entry and my 10 tick take profit, if there's 2 mini magnets in there, I'm not doing it. There's too much obstruction to get through. Does that make sense? Okay, that's what we mean, and there's an example of double mini magnets. Not going to risk my live money on the... Okay, there you go, Rick. Yes, sorry about that, man. We've got 183 people on this webinar and a lot of questions coming through, and I knew I would get to this here. So there's the example right there. I'm not going to risk my money on that trade. Is that a high probability trade or a low probability trade? And should I be worried about taking that risk when I know there's going to be plenty of other trades if I just have what? Patience and wait for it. It's not smart to even try. Does that make sense? Is this helping anybody to see some of these things and kind of go through them from a little bit different angle than what you're used to hearing? Okay, perfect. All right, let's look at a couple more here. Okay, this one is very, very important. Okay, what color is DR? Red. Okay, obviously the market's in a downtrend. So right here, got exhaustion box, trapped order, going long. We're not taking long because it's against the trend. What do we have here? Exhaustion box, trapped order to go short. Is that a valid setup that we would take? Yes or no? To go short. DR's red, exhaustion box, trapped order, short, enter 1 tick below. Yes, it's a valid trade setup. How many of you remember this trade from a couple of days ago in the elite room? Daryl took this trade. In fact, this is Daryl's screenshot I have right here. You can see it. See the little arrow marker right there? That was where he entered the trade. Okay? Do y'all remember this trade? What is the first thing you're thinking to yourself? Well, the bar closed down. I'd have entered here to go down. But what happened? It went up and it went up. past the high of this bar, so I got stopped out and it was a loss. How many of you think that? That was a loss right there, because where's your stop supposed to be? One tick above the high of this bar, and that went higher and you got stopped out, right? Yep, a few of you did get stopped out, but what did Daryl say that some of y'all missed or did not do? What is within just a few ticks of the high of this bar? Because if we enter to go short right here, our stop should be right here. What's just a few ticks away? NQ wall. And what do we know can happen with an NQ wall, a Paul print, mini magnet? We know the market can be pulled to that before it goes the other way. So this is where you move your stop. You enter the trade. If you're using an ATM strategy, it would, your stop would automatically be right there. You need to manually move your stop a tick above that level. Had you done that, and that's one of the rules, right? Just one tick, Carl. Okay. I mean, you can do a couple ticks, but I mean, you just want to get it on the other side of there. If you'd followed the rules, yeah, it'd have been a nail biter. You'd have been sweating it, but then boom, nice trade. And you can see the other marker right there on the chart where it got out at 10 ticks. Okay. Yeah. If you had enough time, I mean, that did move fast. But when you see that right there, that's why you got to be aware of your surroundings. It's just like the analogy I used a little while ago about driving the car, right? You got to know what's ahead of you. You got to check your rear view, check your side views. You got to know what's ahead of you there. But does that make sense? Is that a good example right there of how, of what we mean by that? About getting it on the other side. You know, if you're just a handful of ticks away, just get your stop on the other side of that to protect yourself. I mean, you know, you're broke down on the side of the highway. If you can climb on the other side of the concrete barrier to protect yourself, just hop on the other side real quick. You know what I mean? Just a quick little hop gives you a ton of protection. Especially, I mean, if that were a Paul print, do the same. If that was a mini magnet, do the same. But especially if it was an NQ wall. Okay? James says, great example, worth watching just for that. Well, good. Because in the room, I think it was about 50-50. Some got hit, some didn't. And it's like, there it is. Okay? I'm trying to go through and show you some examples of some of these rules. Okay? Because it's kind of sucks to be told, well, here's a rule, here's a rule, here's a rule. Well, what the heck does that mean? Show me. Give me an example. Let me visualize it, right? Okay. Let's see here. Yeah, Rick, some of the deviation reversal bars are skinny. Yeah, you can change them either way. Like in a lot of these screenshots, they're thicker. I prefer mine thinner. It's a personal preference. You can change the setting. Okay. And that's covered in those chart videos that I was showing earlier about how you can change some of those colors and settings. Okay. All right, so let's move along here. What do we have? What do we have? Okay, good example here I want to show you. What color is DR? Red. So we're only taking short. Was this a valid short? X box, trapped order, close down, enter, go short. Yeah, actually that one was. Okay, technically. And I actually, this is actually Daryl's screenshot here. He entered it. You see it right there? See his little marker? And it was a loss. Not every trade is going to win. Remember, we talked about that a little bit ago. Is no matter how much we go over these rules or show you an example of these rules, or I'm catching on, you're going to have losing trades. And you guys that have been in the room lately have seen Daryl's been trading how many contracts? You've all seen it recently. 10, right? So how much was he down right there? 20 ticks, $100 times 10 contracts. He's down $1,000, a little more. Whether you're trading 10 contracts, you're trading one contract, or you're trading a micro contract, and you have a loss like that, you cannot freak out. What did I just talk about in Vegas? You're playing that game, the gambler's playing against the dealer. The gambler wins a big hand. Does it mess with the dealer's head? Does it make him change his rules? Does he do something different? Or does he be like, oh, I can't play another hand. I'm too scared because you won and I lost. No, they keep going, right? What happens on this very next trade right here? Short DR, short trade, Xbox, trap, short, boom, made money, won. What if he was so freaked out right here after a loss that, okay, I took this, boom, against me, boom, against me, boom, lost. Like literally on the bar before, it knocked him out for a full loss. The very next bar, he has another setup. Does he take it or does he hesitate? He took it, and there you go. So just trying to show you, no matter how much we go over these rules, I'm not just trying to sit here and only show you winning trades, because we all know there's losing trades, right? They're going to happen even if you follow the rules. But you have to stick with the rules. Stick with the rules, stick with your 6-3 rules, stick with your money management rules, and take the next valid trade. Okay? So, clusters and chop. I mentioned this earlier. You guys, I think there's so many that don't understand the power of this compared to what else is out there in the market, compared to people that are so scared of chop or how to trade chop, or chop is coming, am I in chop? Clusters. What are clusters? Order print clusters are these yellow sections here, these yellow levels. Okay? If we have two clusters within 3 bars, right here, 1 bar, 2 bar, 3 bars, there's 2 clusters. That lets us know, okay, a cluster is a high area, an area of high volume, area of a lot more volume than the X previous bars before. Something's going on here. There's a big accumulation cluster there, a big accumulation cluster here. That means potential chop. So if I see that, 2 clusters within 3 bars, I'm not taking the next trade, am I? If it's still in this little range. If it breaks way out of that, okay. But that's a heads up to say, hey, we're potentially in chop and potentially going to be going into chop. Don't take trades. Okay? Then what happens again? What do we have here? Exhaustion box, trapped order. This was even technically a enhanced trade, right? To go short. Hey, let's go short. There's another cluster on that bar, isn't there? So there's 2 clusters within 3 bars here. There's 2 clusters in 3 bars here. Aren't you glad you didn't take that trade short? And I mean, in addition to that, yeah, you had levels down here, but boom, just chop and chop and chop, and finally it breaks out. Okay, you wait for it to either break way out of the chop, to break out of the chop before you start trading again, or okay, there was 2 clusters within 3 bars, but now we've had several bars and there's no clusters. There's 1 trade set up, not going to take it. Wait for the next one. Okay. Randy, if there's 3 more and there's not a cluster, okay, wait for 1 trade set up, don't take it, then take the next one. Or if it breaks out of the range, then you could take it outside of the range. Does that make sense? Okay. When I say way out of the chop, I should just say out of the chop. Okay. If it's out of this crap right here and there's a trade down here, okay, go for it. Okay. So it makes sense? So notice that something different about what we're teaching you here today. We're not adding, it's the opposite of what you'll see just about anywhere else. or with just about any other system. A lot of systems are like, well, when this happens and this happens, take a trade. Oh, well, let's get it better. Well, let's add this other indicator in, and if it does this, then we take the trade. And if this one does this, we take the trade. And this one, we're actually looking for reasons to not take a trade, right? If we see, and what are they based on? If we see order print volume clusters, boom, hey, heads up, stay out. Hey, if there's these important levels in the market, hey, stay out. It's what the market is telling us, not some random indicator or some random emotion or gut emotion, gut feeling. It's what the market is leaving there in the order prints telling us to look out for. Okay? All right. Got a couple of review charts here, but does that make sense to everybody as far as the naked X boxes with the trend? Okay. Are there any questions about naked X boxes with the trend? Because we're gonna move forward into range bound markets, but I just want to give you a chance here. Any questions about the trend? Okay, good. Mark, yes, yeah, and you'll see some of the on several of these charts the little entry markers. Okay, because most of these are actually Daryl's screenshots that he took. So yes. What about Ronald? What about two clusters within 4 or 5 bars, same price mark? Um, that doesn't quite fit to this exact rule, Ronald. Ronald says, what about two clusters within 4 or 5 bars, same price mark? That's not exactly this rule here, but I personally, I don't want to get off on a rabbit trail. It doesn't fit into this rule here at all. Okay. I personally would mark that level mentally in my head of, hey, something's going on at that price level. That might be the axis of chop. That axis of chop might turn into new support or resistance. I'd love to take a trade bouncing off of that. Like if it, this was a cluster, then over here was a cluster at the same price, and it broke away from it, and then came back to bounce off of that. That's kind of how I would look at that. Okay. Does that make sense, Ronald? I mean, without going off on a rabbit trail, I do know what you're talking about. That's how I would personally use it or look at it. Okay. Okay, then we're going to move forward here. I'm going to skip on down. Okay, so we talked about trading in the trend. Now we're going to talk about range bound trading, trading the naked X boxes in a range bound market. First of all, do not trade into the top or bottom of a range. Okay? Don't trade into the top or bottom of a range. The DR, the deviation reversal color, does not matter in a range for X box trades. Okay? Does that make sense? We're only looking to go in the direction of the DR in a trending market. Okay? The DR color does not matter when we're trading in a range. Now, remember how I told you earlier, hey, here's the DR, take a look at it. Several of y'all were like, oh, I never looked at it like that with the trend. Got it. It's a very basic and objective, simple way to determine the trend. I'm going to teach you, we're also going to teach you a very basic, simple, objective way to look at a range bound market. Okay? There has to be more than enough room to take your profit between the ranges. Okay? So between the entry of the naked X box and the take profit level, there has to be enough room to profit. I'm going to walk you through examples and show you. Do not take trades in the middle of the range. Do not take them going into top or bottom of the range. Simply defined mini magnets that are spread apart help us define a tradable range for naked X boxes. Okay. Now, as you trade more and watch your charts, learn the market more, you'll understand other ways to spot ranges. But we're trying to teach you as kind of we're taking this from like the approach of like a newer trader, how can we help them easily spot or define a range? Okay, and if you're not real clear and have a good grasp on what the range or the trend is, just stay out until it becomes clear. But let's look at an example here. Okay, a couple examples. So notice a couple things. DR, green, red, green, red, green. Not trending, right? Okay, but we're not even really worried about that right now. But that is another tell of, hey, the market's ranging. But do you see here? We have this mini magnet right here, right? And then what do we have down here? Another mini magnet. So look at the two mini magnets creating the top and bottom of your box, as it were. Okay, does that make sense? So if this is the range that you're trading in, okay, this is kind of, this is your range. This is your top and bottom box. So, and again, the DR color does not matter when we're trading in a range-bound market, meaning we don't have to have it red to take a short. We don't have to have it green to take a long. So as we're looking right in here, this trade right here, we've got an exhaustion box and we've got a trapped order. Okay, so right here, our entry be right here. Do we have easily 10 ticks of room to profit before we get to the bottom of the range box? Yeah. Okay, so we could take that trade, right? Down here, we're at the bottom of the range box. We've got trapped orders and exhaustion in an up close bar. Is there at least, an easy, with room to spare, 10 ticks, room to get 10 ticks of profit between here and the top line of the box? Sure. So let's take it. Okay. Pulls back down here close to the bottom of the box. We have exhaustion box, trapped order. Do we have 10 ticks room here to here? Yes. Okay. Those are trades we could take in a range bound market. So does everybody understand that basic concept? The DR color does not matter. We're not looking at DR. That's not one of the rules. But from what you've learned here tonight, you can visually take a look at DR and be like, okay, we're flipping some colors here, right? But you're looking at these mini magnets. This is the top, this is the bottom. This is your bounce. You're playing ping pong here, right? Okay. Yes. The range bound is defined by these two mini magnets. I mean, and the market clearly is not, trending or zipping one way or the other. You've got this mini magnet, this mini magnet here. So when the market comes down and bounces off of this one, doesn't quite make it up to this one, starts coming down again, that kind of more clearly even defines for you, hey, we're in a ping pong here. Okay. So, Todd, does the range always have to be a mini magnet? What we're teaching as the rule, just for newbies as it were, is to use those to define it. They're the most powerful for defining the range. I'm not saying that it couldn't be, hey, I got a mini magnet on one side and down here is a ZOI and a NQ level and 3 Paul prints. Okay, you use your brain about it, but to keep it simple, we're just going to say the two mini magnets. Those are more powerful. As you move on as a trader and learn as a trader, you can look at some of those other things, but to keep it simple, and as far as the most powerful, it's mini magnet. Okay. Now let's look at this next slide here. Okay. Again, we're not paying attention to the color of the DR. Right. So we've got mini magnet up here. We've got two mini magnets down here. Later on, we get a second mini magnet up here. Clearly a defined box range. All right, no trade going up here, no trade coming down here, no trade, no trade, no trade, boom. X box, trapped order at the top of the box, coming off double mini magnets. We would enter short here. Do we have plenty of room, more than enough comfortable room to get to 10 ticks before the bottom of the box? Yes, and we take it. Okay. Now, this one gets a little trickier, doesn't it? So we've got mini magnet up top, mini magnet on the bottom. Okay. So this first one right here. Okay. We've got a trapped X box going up. Now we'd be entering right at just above, okay, the NQ wall. Okay. So do we have 10 ticks room to get up to this level here? We do. Okay. But now as we come here, we come back down, we're not quite at the bottom. This one here, see this? Trapped X box, Paul. Do we have 10 ticks comfortably? That's kind of more to the middle of the range. And I've got a mini magnet to go through. I've got a ZOI to go through. I've got a paw print to go through, and barely 10. Do I want to take that? No, I'm probably not. Are the odds and probabilities in my favor taking that trade? Not really, right? Not really on that one, you know? Now, this one back here would have been iffy, but now there's a new paw print. See that, Eric? Like there's a new paw print there in my way that really wasn't there before. I'd have felt okay about this one. But then now on the second one, because see, the entries are kind of around the same level, but now there's another obstruction in the way. And the last time it didn't even go past, I don't want that. Okay. What about this next bar? Exhaustion box, trapped order, short. Is that an easy 10 ticks potential room to the bottom? Or am I entering to go short towards the bottom of the range box? You ever heard the expression of buying at the highs, selling at the lows? Like I'm selling at the low, like I'm selling towards the bottom, going into the bottom of the box. No. Too close. Too close for comfort. Don't want that. Can everybody see that and see why? That I'd be selling right here in the bottom of my box, just right there. There's not much room. Okay. Now what about up here where I've got trapped an X and I've got a good amount of room coming down? Right? Do you see the difference of buying towards the bottom or selling towards the top? Like the first bars? Not like I don't want to go short right at the bottom, or I don't want to go long right at the top. Here's a good example. Look at this long. Exhaustion, trapped orders, bar closes up. The top is just right there. Much less getting through all these obstructions. But even if the obstructions work there, look how close we are to the top of the box. Do we want that? No. If I'm going to buy, I want to buy off a bar coming off the bottom, not going right into the top. Okay? Does that make sense? Does that example help at all? Of trying to just draw that square box in your head and realize I don't want, I want to get in at the bar coming off the top or bottom, not almost at my destination. That's how you trade in range bound trading there with the naked X boxes. Okay. Let's see here. Now, What about this one here? We've got a mini magnet down here and a paw print, right? Kind of defining that bottom of the box. Then we've got a mini magnet here. Clearly, the market is choppy and rangy, right? Does everybody see that? Like, is that hard to see for anybody? Is anybody having to struggle to see that or turn your head to the left? I mean, this is the bottom of your box. This is the top of your box. You just see crap in here, right? Can everybody see that? Okay. Also, quick question. Based on what I kind of showed you a little bit differently earlier, what do you see down here? Red, green, red, green, red, green, red, green, red, green. Are we trending? Mm-hmm. Exactly. Now, let me ask you guys a question. Look at this box, this range box, and then tell me, is that really what's a better definition of what you're looking at there? Is that ranging or is that tight chop? Yeah. How many yellow high volume clusters do you see everywhere? Right? Do you see that? I mean, you're outlined, your boxy, you know, your tight chop, range chop is outlined top and bottom with these mini magnets. And then inside of it, there's another mini magnet and another mini magnet and another mini magnet and pause everywhere and exhaustion everywhere and clusters everywhere. Yeah, Tim, we want to stay out of that, right? Like, do you even want to play in this area? Look, let me ask you this. Are any of these trades, it's just too tight? Do you see how tight this box is? It's just too tight to be comfortable. Are any of these really even legitimately worth taking? I mean, yeah, you got an Xbox and a trap and it closed and you've got 10 ticks to down here, but you've got some stuff in the way. This bar closes up with an X and a trap. You don't even have 10 ticks there. Here it's coming down. You got 10 ticks between your entry and the mini magnet, but you're going through two Pauls and a Z. You need to go get coffee, right? You need to walk away and don't play, or walk away and go play somewhere else. But this is where you hear Lori say, don't just leave this alone. Wait till it wants to play nice. Like, do not sit and stress about this when it's that tight right there. Yeah, Carl. Carl says, yeah, you're just going to throw your money away. Carl says, just mail it to me instead. Yep, Randy, get paid to wait. And right here, you're going to get paid to wait till you're past all this. Does that make sense, guys? So look at that. That's one of the first things you look at when you're like, okay, this is clearly a defined chop box. The market is no longer trending. It's chopping. It's ranging. We've got a bottom and top of a box. I see it all. Measure it. Be like, okay, where are we really at from top to bottom here? Is this even worth playing in? Because if it's not worth playing in, look at the chart. What time did this start right here? About 11:45 to 12 noon. All the way over here is what? 1:15. That's like an hour and a half. Yeah, it's lunchtime. Did you really want to sit and watch this crap for an hour and a half of your life? That's an hour and a half of your life you're never going to get back. Just let it get out of that area and come back. Do not waste your time. Understood? Agreed? Everybody see that? That's walk away time, right? Okay. Okay. So Was that helpful, guys? We broke down naked X boxes with trending and following the trend, and we broke down naked X boxes in ranging markets. We talked a little bit about how to define a trend using the DR. We talked about how to define a range bound market referencing the DR, but that's not a rule, mainly at looking at the mini magnets. Okay? Looking at the mini magnets to define the top and bottom. Okay? So, once again, this has nothing to do with the enhanced X boxes. That's a very different, those are very different rules. We're also not talking about counter trend and divergence. We're going to talk about that some next week. This is just about naked X boxes with the trend or in a range. Okay? I hope that was helpful for you guys. I know that y'all haven't heard from me in a while, and some of you newbies might not have really heard from me at all. And sometimes having a little bit different input, a little bit different type of training on some things can help see things from a different direction or help to understand things a little bit differently. Okay? So for those of you that are new, make sure you hop on and check out all of the training, go through all the videos, set up your Ninja Trader. Okay? If it takes longer than an hour, give us a call. All right? Thank you very much, guys. Getting a lot of compliments, a lot of things. I'm glad y'all were on here tonight. I'm glad this helped. Glad I was able to meet and talk with some of you for the first time. And I really appreciate it. Hope that was very helpful. Keith, I will absolutely be at the live training in March. I will be on stage and running most of the whole thing and yelling at everybody and, keeping things in order. I'm anal like that. Carl, you're definitely going back to the hotel again this year. But anyway, guys, get your Ninja Trader set up, get in the elite room, learn how to place trades, start demo trading, get your futures account funded, post your charts, ask questions, get in your mentor rooms, make use of all the support you have in the mentor rooms. A big thank you to Lori and all the mentors that are running those rooms. They're there for you. Around the clock, those things are going. Make sure to make the most of them. Begin live trading as soon as you can. Check out the What's Next section there in the Sniper training page. And again, start and focus on the enhanced X boxes before you move on and add these others on. And again, start with NQ or MNQ. Don't be focused on a bunch of different markets when you're starting off. There's plenty of trades on those markets. You can trade anytime. And again, we get paid to be patient, and we get paid to learn to only take the highest probability setups and not just take everything. There's plenty of trades there. So be the sniper and not the target.